Hello, welcome to another market review for the week ended August 7th, 2020. I will tell you that the market under the week under review was purely a bullish market. A bullish market, I would say. According to what we said the previous week, that the month of July has given us a technical pattern of market resisting further decline. It has been proven in this week that market has refused to go down for the week under review. If you look at this chart on a monthly basis, before I bring up you can see this what we call candlestick. It has showed us that the market for the month of July resisted decline to close a positive 0.88 for that month of July. You can see that the first week of August is already a green one and uptrend through. You can see it here. We'll go back to our monthly on our weekly chart as we were discussing earlier. And before we go further, I want to give you the market data for the week under review before we go further into other details. For the week under review, the market opened, which is the all share index that measure market performance for the period, either for 1 year, for a day, for a quarter. This is what we use to measure market performance in terms of what the market has really returned, for the week, whether positive or negative. Then, if you look at the market opened at 24,693.73 points and closed at 25,041.89, gaining 348.16, representing 1.41% for the week. It said that this week was really up. And also, if you look at the weekly chart, this is a weekly chart, you see that the market resisted decline in these 2 weeks. That was in the month of July, the 10th. That is on the 10th of July, and on the 17th, market was flat. That same two weeks, market was resisting for that decline. And this when we start seeing the earnings report start hitting the market and start giving sign that many companies that we have seen so far has really beat market expectation. This is when they sign and people started readjusting their position. But the good thing that the market for the week under review has come back to the position of after June 16. That means you can see it for yourself here. But one thing that we should notice here as as trader or technical analyst, that the market is forming already a double bottom as we speak now. That means a breakout of this level by next week will give us an uptrend that the trend will continue. But as we speak now, it's a good trend as we speak. As that the trend is beating already for straight 3 weeks now. We have seen a positive close, a bullish run for 3 weeks, which is likely to continue because many companies are yet to release their earnings, especially the banking sector that where we're expecting interim dividend. And if you look at the history of these banking stocks, or called the earning release date, which I've sent to our subscribers and those on the group already, those dates tell you that for all of them is from the second week of August to start seeing result of this interim dividend paying company. I know their account is audited one. It will start coming from the week we are entering, and that will be good for the market. It's going to add another momentum to the market when those interim dividends are coming. That means the possibility of the market breaking out this resistance level is high. But I told you earlier that when you see market forming a double top, what you do, if you're in a position that you have made profit, you take a 50% of the profit and leave the rest to. But the possibility that the factor that is behind the market as speak now, despite other negative factors we're going to discuss, but the one that is driving the market, I've told you earlier that the direct impact of earnings in the market is about 20%. And when that is still on, you can see that the movement of stock within this week was not as a result of other fundamental reason, but because of earnings of this company. You can see how the market dragged, because if you're to be other sentiment added to this earnings, the market will move faster. But you see the rate of growth. Let me show you the daily chart so that you see what I'm saying. It tells you that these numbers are the ones supporting the market, nothing else. You can look at the movement here. It was on a smaller gain before we see about 0.414 Friday, but others were below 0.3% gain in the previous day before Friday. Said that it was it just earnings. People are reshuffling, moving from one company to the other because of the earning performance and what they are expecting. But that not being the case, I expect that for the week we are entering, because we're expecting the big boys in the banking sector, those the first tier banks to start rolling in their numbers, that will also change the momentum for the week we are entering. For that, if you are in position that you know that these companies are yet to release their number, you can still hold on and wait to see their dividend declaration. But you know actually that from those banks we're expecting, that we are not expecting them to grow their interim dividend. If they do, that will be fantastic, and that will make the price that you as an investor, you need to sit down and see where you are. If you're already in the ones that their prices are high already, you can still hold to see the result. But those that are yet to move significantly, I think you should look at the weight of those ones, because funds actually has entered this market as we speak. I want to show you the money flow index for this period. You can see the money flow index, where it is now. Money has really entered, oh sorry, this is for UBA. Let's go to NSE. That's for UBA. Let's go to NSE to see the money flow index for the period. That will give you an insight of what I'm saying. That funds are entering the market. You can see, look at the flow. This on the daily chart. Look at the money flow in the month of July, and you already see what's happening in this the first week of August. I told you that the gain within the period was not much. You can see that the money flow here was a bit slow, not up, was just trying to find direction. But if you go on your weekly chart, you see that the money flow also was very, very strong on the weekly chart. That's not what we are looking for. This is the chart we are looking for here. This, you can see money flow index, how it has moved. It got to this level, it's still slowing down on the weekly chart, but still looking up gradually for the week under review. Look at the chart, the date here. Though this on the August 7th, you can see the market, the index closed at almost the money flow was above 50, which is a reading 67.24 for the week, which is not a bad one. You can see that this is where you can say you'll be looking at what to go to 75.48, but we are around here now, and we're expecting that this week we are entering, we expect earnings to come. You see that the market has really sit on earnings. Earnings have supported the market, not other information. And also the crude oil price, yes, my crude oil price tried to resist decline and remain a bit stable for the week under review. Also have supported the market. Looking at the general sentiment for oil, for that you can see what I'm saying, that funds are entering. But for the week we are entering, if earnings have supported the market to this level, then the week we are entering, we expect to see a rally, a breakout from this double top we are seeing at this point. But a breakout is very, very possible. Why? Because once these numbers are coming, and also don't forget that in the week we are entering, we are expecting dividend qualification date for MTN and for from Flower Mill. That also will support the market for the week we are entering. For me as an investor, you should not just panic, but all you do just hold on onto your position. But like I've said, for those banks we're expecting to do interim dividend for the month of August, and the result will come likely by next week or between now and end of August. There are these banks, we know it already, but we need to look at what will be the yield of these banks if they are announcing their dividend. Now if you are buying now, the yields also should guide you. You are there in the market to make money. As far as the inflation rates remain high, you will look at what are you gaining from the stock, the capital appreciation plus from the dividend yield. From the table we have prepared already, which is going to push to those in the buy and sell signal, is one. As we speak now, as at Friday when the market closed, the prices of these stocks has moved inch up, especially the price of GTB has inched up to like 24 naira 35 kobo. Zenith Bank has moved inch up to 16 naira 90 kobo. UBA is selling for 6 naira 55 kobo. While Access Bank is selling at 650. On these prices, the yield of these companies has also declined, because compared to the previous week, where if you bought at 6 naira 10 kobo, and by buying at this as Friday, your yield is different because you enter earlier at a cheaper price. As at Friday, the yield for the 30 kobo interim dividend we're expecting, because that is what we're expecting from the bank. If they do 35, good. But within what is happening in the economy, I don't expect the banks to go above their normal interim dividend or less after this economic reset, this new normal will move to 2021, and by God grace they can adjust. But for this period, I don't see the bank adjusting their interim dividend, even their full year. Many of them might have to keep their full year flat, what they pay, or they adjust little. But for this interim dividend, we expect them to maintain their status quo, what they paid the previous year. If it goes by what they paid in previous year, 2019, we expect that GTB will give us a 30 kobo interim dividend, and that will give you a yield of what? 1.23%. And if Stanbic IBTC also go by the way of their 1 naira interim dividend, that will give you a yield of 3.03. If you are buying at a price at the close of Stanbic at 33 naira as at Friday, the yield you have on that stock is 3.03. While if you are buying assets at the close of Friday price, the yield you have in assets, if the assets maintain their 25 kobo, and you can see that assets is also waxing strong, acquiring banks, and and when a bank or a company is building capacity, they are preparing for what? For more earnings. I see potential in Access Bank. If you are a long-term investor, you can actually take your interim dividend and expecting the bank to release their audited half-year result. For that, will give you 3.84%. And I'll tell you that is the highest among all the expected interim dividend if they maintain their 25%, the 25 kobo interim dividend. Followed by what? By GTB, by UBA. Sorry, UBA is closed at 6 naira 55 kobo as at Friday. That will give you a dividend yield of 3.05%. Then, if you are looking at Zenith Bank is also attractive at it closed at 16.90 kobo. The dividend yield for 30 kobo interim will give you 1.77% yield, and that of the Consider Allied just announced 10 kobo, and that 10 kobo yield as against 5 naira 50 kobo will give you about 1.81% yield. You know already that MTN is out there with interim dividend of 3 naira 50 kobo, which is good. By all standard, moving from 2 naira 94 kobo they paid in the previous year to 350 is a good. Despite that the earnings was a bit flat. If you look at their bottom line was down by about 4%, but top line was up by 12%. Yes, that number is a misnumber, but the company also go ahead to reward investors with interim dividend of 350 kobo, which is good. Then we're expecting Flour Mill also, that is a full year result. A full year dividend of 1 naira 40 kobo. You can look at all these yields and see where you can take position with this data we are just giving to you. This is for the interim dividend. And also, if you look at the inflation rate, you know that the factors that are really putting the treasury rate is becoming more now. Because why? I will tell you, in the history of Nigeria, this is the first time the fuel price is hitting 150, and you see the conflict or lack of coordination between the policymakers in Nigeria. You are injecting funds to really cushion the effect to mitigate the effect of COVID-19 on the populace, on the economy. Automatically, you are now increasing the pump price. You know that this pump price is going to affect every facet of business in Nigeria, and that alone as another force added to inflation. That means inflation that we are seeing at 12.56 as at the end of at the end of June, then we are going to see this inflation hitting 14% if care is not taken. But the recent adjustment has further really pushed prices of goods up, especially those food baskets. These food baskets have to leave the local area, bush to the market, and those transport will also hike their fare, and that also will be added to the cost of the goods. Prices will keep on going on. Not only that, people that are working, their transport move from one place to another, they are still paying from. Then this high inflation is going to also affect every policy the government are making, especially the monetary policy. That's why they try to balance it, but the other either they call them agency, government agency, department, ministry, all are not working as a team. You can't be injecting funds into the economy and at the same time you are taking away from the economy. There's a conflict there. I think our economic managers and the government should sit down and look at the activities of this, or they come together and make policy that will give direction where the economy will go. As we speak now, with all these points off and down, even the injection of the 2.3 trillion we're hearing, let's see. That's why that they said they remove subsidies from the fuel still, because we have not seen the impact on the economy. Yes, you know that it was not long done, but we have not seen the impact. Yes, single no exchange rate is there. We have not seen the impact, because if you look at the labor market, the thing is rising on a daily basis. Yes, they say they've increased, the tax net. If all these are done, let's have direction. Let policy build on all this so that the economy will have direction. If we have done all this and the economy is going up and down, nobody knows where the economy. You can't plan. You think the government should sit down with the economic team, policymakers, to review the activities and try to coordinate their efforts. When you are making policy, let your policy complete. Support the other sector, so that other policy making agents, so that it will work in harmony to impact the life of Nigeria and improve the economy. You are not a one-man. We're not in a one-man business. You should need to be coordination. There should be synergy. There needs to be coordination between all these agency and the ministries and the monetary policy and fiscal policies, so that things will work. Let there be coordination in things, so that it will give direction. But when A is saying yes, B is saying no, it will bring confusion and people don't know where we are going at that point. I think that is for that. Then another thing you look at before I round up is that since we're expecting earnings to come to the market going forward, I see the market moving up. And fund already, you can see from what I showed you, funds are moving to equity assets gradually. And once this earnings season is done, you see a little readjustment on some prices of stocks. People will be positioning for the full year, and that is why, as a trader or investor, you need to really get the Mastering Earnings Season video. It's a 10 video that you watch. It will help you on how to position your portfolio for the full year. Yes, we are having an online training at the middle of September. That is where we are going to look at recently on how to position forward for the last quarter of the year and therefore 2021. That seminar is coming, an online seminar anywhere in the world where you are, you can join. And it's a token. Now that we are doing from home or from our offices to come on Saturday, that also is going to help to prepare forward for the last quarter of the year and for 2021. But before I move further, I said earlier that if you have not gotten the video for Mastering Earnings, you need to get the video. And there's the first video that we did, which I will say in that video, you get stocks that will lead the recovery. The recovery we're expecting. Which are those stocks that will lead? You need to get that video to know what to do. And in that video, you have a defensive stocks, you have a dividend paying stock with high yield and a strong fundamental. We also have a video on the stocks that will benefit from this pandemic. I know that people that bought it earlier, they are happy because all discussed has happened and they are there for you to see. It's not that a story. People that bought it, they are testifying, and you, if you get it, you will see for yourself. And also, the last one is the low price stocks that you can trade at this point now, that we are seeing this volatility. Do like as well. They also mentioned that you can take advantage of the market now if you know what to do. That is why we need to get these videos, and why we need to get them as we speak. Then for the week under review, before we round up, the market was bullish, which I said that for straight 6 days from Friday the previous week and 5 days for this week under review, the market was in green. That is a good sign. And on that, they will have a 41 advancer for the week and just 18 stocks that declined for this week. For all the week stock traded, about 41 was up, while 18 was down. It tells you that the market, and also if you look at the sectorial performance, bullish, because it's only one sector that lost within the week under review, and which was insurance sector. Consider the banking sector. I've told you earlier, if you are following me, that there was increased activities in that banking sector. People were buying, positioning in order to see the other banking results from those that are not delivered. They are giving insight to what we expect from those that are going to be. These are the big boys and they have robust balance sheet. We expect a better result. If you look at that, the banking sector was up by 4.94%, followed by the oil and gas sector. You know how happened. If you have gotten the hot stocks to buy after this earnings season, I rule out that hot stock. Those stocks we say we should watch. Those stocks really perform magic. If you see, if you look at that hot stock, if you look at Step was among those I say you should watch, because there is already a support level. I put that will guide you to know, and it touches that support level, a bounce back for Steplat. These are the things. That's why we also need to log into buy and sell signal to see those hot stock. Now that any system is coming out, so that you know how to readjust your portfolio going forward. For those in buy and sell signal, they don't have issue. They are already in the buy and sell signal. You can just log in and look at and make this, because you have different goals. That's why we'll give option, because your investment objective goal will guide you the kind of stock you pick. That's why we'll give you those stock to buy now, and that hot stock, and those to watch, and those to hold, and those stock that you should dispose from your portfolio now. Sell off immediately. We all are given in that hot stock. For we are given after we have studied all the earnings release so far, technically and fundamentally. We'll pick those stocks to buy now, those that you should hold, and those that you should discard and sell off immediately, and those that stock you can watch. When I mean watch, those that it's like you look to see a price to enter. That's why I say Steplat is among those stocks to watch. It has still, you see what it has done for just all the week. It got the price. That's why the bad result is still bouncing back immediately. There are some stocks that are posted red account, but they won't go below the price they are, or you watch to see that they get to a strong support level, that any moment from that point they start going up. You need to also look at those stocks as you speak. These are why you should get also log in to buy and sell signal and get this information. If you are not a member, you call the number that will be displayed, and so that they will connect you, and you start getting information as market open from next week. On this note, before I conclude for this, see that the major mistake many investors are making, that they are following bandwagon to do investment. No, you as an individual, you must have your financial goal. Tie down your financial goal, the kind of stock that you will pick. That's why I said it earlier. For those hot stocks, you need to really know your financial goal, your trading goal, your investment goal. That will guide you the kind of stock you pick. If you are one that are looking for dividend in that hot stock, you see those dividend stock in the video that I said do high dividends. You see them there. You take position right now as you are looking towards the end of the year. And these are how to invest. If you are a trader, the kind of stock that you now will move immediately on the strength of information around, you take position. If you are a pensioner, the kind of stock that now they will give you dividend like two times in a year, you take position. This is why let your investment go. Every other thing will come after you have set your investment goal. If you are 60 years old or 50 years old, the kind of stock that you go for is not the kind of stock a guy of 25 years, 30 years old will go. Because your goal different and your risk tolerance different. You need to know. Write your goal. Make it short, and so that it will guide you. And whenever there's one thing I noticed again, which I want to explain here, we're going to discuss this in the coming training, that after every position, whether you have made loss or gain, there's what we call post-trade analysis. Look at that trade. Where you've made loss, why do you make loss? Analyze it. If you have made profit on that trade, analyze it that, I can enhance my profit in this kind of stock. My decision can be better. When you do that on every trade you take, you see, you will become a better trader, a better investor, and this market is going to make work for you if you know how to trade, because it's about knowledge. That's why we people that you should learn more and you earn more. And that's why we're rolling out videos online, on the television, on the platform, or this YouTube, every angle, trying to teach and give direction for investors. On that note, we'll draw the curtain here and say, God bless you. Have a bullish trading week as we look onto an uptrend in the new week. God bless you and enjoy your day.